Yeah. Say, yo, boy. Big Rob. Back in the house. Welcome to the Sin City Crypto, live from Las Vegas in Big Rob's loft. Man, what a weekend, huh? What a weekend. What a weekend. Stable coins aren't stable. Banks aren't stable. Your boy's not stable. The markets are all over the place. Bitcoin's still at 20,000 somehow. It's interesting, man. This is some interesting ass crypto times, man. If you aren't watching, if you aren't glued to your cell phone like this, like, what is going on? Like, you ain't living, bro. Is it fun? Possibly. Could be a lot of fun. I think it's a lot of fun. Is there a lot of real juicy news in here, though? Yeah. There's some juicy news in here, man. You know, I don't know, dude. Things are crazy. What do you guys think? What's your first thoughts when it comes to the markets? What's your knee-jerk reaction? What do you think's going on? Y'all freaking out? Are the banks collapsing? What are you doing with crypto? Are you laughing at everything? You watching Janet Yellen? What's going on? What are y'all doing, man? I want to know. What are y'all doing? Crypto's strong though. Ain't nothing happened to crypto. Bitcoin's unchanged. Ethereum smart contracts are still running. And it's Sunday. It is Sunday. Sunday, Rant and Ramble with your boy, Big Rob. Just vibing out. We're gonna vibe out on some music. We're gonna play some music today. We're gonna talk about crypto. We're gonna talk about financial decisions. If you're new to this segment, we like to focus particularly on personal growth, on sound mental practices that can help you get more out of your portfolio. And we also play a lot of music on Sunday. I like to chill, man. Open it up with a little jazz intro there, man. Get the Sundays going. I say the same thing every week, and I'm gonna start off by saying it again. Sunday is probably my favorite day because you get to evaluate everything that happened. First of all, traditional finance is closed, so makes sense, right? Why stay open on a Saturday and Sunday? Because nothing happens on Saturdays and Sundays. So no, it's like you're pulling back this rubber band. So on Friday, you had this big bank closure. The Silicon Valley Bank went under, or was going under, and got taken over by the FDIC. And isn't it funny they do it on a Friday afternoon, and then there's nothing they can do on Saturday and Sunday, right? And so all you can do is speculate for a whole weekend. And then you get every person on mainstream media just having their own opinions, and everybody on mainstream media coming out here and saying, oh my God, this is going to happen. Everything's going to go under. Jerome Powell's going to do this. But you can't do anything till Monday. It's the world we live in, man. I think, you want a package delivered, you can get it delivered on a Saturday, Sunday. You order something from Amazon. Post office, though, deliver on Sundays. They're closed. I think we're going to be shifting into a new world where we operate 24 hours a day, 7 days a week. It's inevitable. Can't just simply look at what time the bankers and politicians are at work to decide if the world itself, the finance operations of moving packages and money and wealth around, those are going to operate 24 hours a day. Guaranteed. We're going that direction. But before we do, I want to say what is up to all my people in the chat. We are 57 people up in here today. I am jazzed up, bro. And for let's get some more music going on, man, because I'm feeling it today, man. I'm feeling it today. All right, so if you are new, say hello so I can drop an hola back at you. We got Crypto Hands was the first up in here. We got David A saying what's up. We got Destroyer. We got Big Chili Willie. We got Redman, Beachhead, Gnarly, Sucre, Wise, Frosted Flake, Shake and Bake, Rob Dale, and then we also got Armzilla. We got Cozy. We got who else is up in here? Dibsy. He's new. I've never seen you before. What's up, Dibby? Welcome to the club. We also got 21 Window. We got Chris Crypto. We got R.A. Dangle up in here, Mac Baby. Then we got Strong Like Wood, Why You Loud, Your Owner, Turkey Twizzler, Gary Gensler. It is a packed house in today. Hola! Man. All right, so we got 70 people up in here, 33 likes. Let's get this up to 100 likes. I want to start this thing off. I want the chat to be as hyped as I am right now. Let's get we got 70 people in the chat. Let's get 70 Olas in the chat. Let me see them Olas. I'm gonna put the first Ola in here. I better see 70 Olas straight off the rip. We also got Alex Me dropping the Ola. Ola! All right. And so Talladega Fitness, he's up in here as well. And then Jeffrey Stones of Fire, and then we got Big Chili Willie, my boy over here, dropping a $4.99 super sticker. My dude, what's up, dude? Yeah. Oh dang. All right, he's starting before we even went live. And then we also have my boy Mac Baby also dropping a $5 super chat. No sound effect this time, but there we go. All right, so $5. If you had 40K, what 10 coins would you take to a million by 2025? Aside from BTC and ETH, not financial advice. Love this show. Keep up the great work. I'll give you some of my altcoin picks. It seems like it was chew on a little altcoin portfolio. I'll give you a little insight there. But all right, so how many Olas we got in here? Do we get a lot of Olas? All right, let me check my Ola record here. We got okay, all right, I see y'all. We got Astro in here, and then Egon, Jeffrey, Philip. Ola! Welcome. So we got 80 people up in here. That's good. It's not bad. All right. So Silicon Valley Bank went under. Going under. Got picked up by the FDIC, right? FDIC picked them up. They were like, hey, we will save you. It's led to, and I'll get into some deep thinking on personal growth in a little bit. I want to hypothesize today more on the direction of traditional markets, the potential of what would happen with bank runs becoming the norm, and kind of how our system is set up in a way that leaves little protection against bank runs. Essentially, bank run is a mentality. It's a faith. And the banking system we have now is set up by the faith of the user into the system that is the banking system that we have, which is also a fractionalized reserve system, which is a requirement that the banks only keep 10% of funds on hand. And so 90% of it, you can lock it up and do whatever you want and not have it available, which makes absolutely no sense. But we'll get into that in a minute. Also, if you have any questions, anything you want to talk about today, make sure you put that in the chat, and then we'll be glad to go over any questions. I'll be honest with you. You guys a lot of times will put questions in here. This segment was a Q&A, and then I just got into my rambling and I didn't look at the questions. So my wife told me, she was like, hey, you titled it a Q&A and don't answer any questions. And I was like, you're right. Because all I do is rant and ramble. And then I was like, well, you know what? That's what I'm going to call the show. So the segment is Rant Ramble, but I will love a little community engagement. So let me know what you guys are thinking. We started off by saying, what do you guys feel with the market was going on? Are you freaking out or overreacting? And like Big Chili Willie says, I have to get to the ATM soon. So let's start the show. So Big Chili Willie, is it because you're afraid of the bank run, or do you just simply need to go grab some cash? And then, so we are going to change our community tier 1 memberships to center community, by the way, or centers. So that's coming as well. I saw somebody asking about that. And then 21 Window said, it's not looking good for SVP. Oh, you know what? Actually, I have, should have chat here now. Let's see here. So there we go. Yeah, I got the chat back. And so, all right. So here we go. So we got the chat pulled up as well. And so, Big Chili Willis says, good afternoon from Bank Run USA, and make sure you hit the like button as you withdraw your money. So now that's your boy about to withdraw his money, baby. So, all right, now let's take a quick look at the markets, and then we'll get into what's going on. Also, Janet Yellen just had an interview this morning on Sunday, I forget the name, Face the Nation with Margaret Brenner. So she went out there, basically said that they are not going to be bailing out the banks, not in a similar fashion that they had in 2008. We're gonna actually pull this video up here in a little bit, so make sure you stay tuned for that. But basically, Janet Yellen is saying, like, hey, we are not gonna be bailing out the banks. We are not gonna be printing money. But she did say that they are working to protect the depositors. So if you had money on the bank, that they are looking to do something so that way all these thousands of companies won't essentially go under because they don't have access to their funds to pay payroll. Now, a lot of these companies were drawing from Silicon Valley Bank as a line of credit. And so those operations are all gone. But if you had money on the bank, it sounds like the Fed is, or it sounds like the government is actively working to insure those deposits. Because remember, FDIC only insures up to $250,000, which seems like a number that probably needs to be updated by now. Because when they came up with the $250,000, this was way long ago. This was back in when they established the FDIC, and so it's been past the 80s since it's been at 250,000. I think now with inflation, safe to say that you probably should raise that limit a little bit, because maybe back in the 80s, 250,000 was a lot of money. Not to discount its value, but I think there are more and more Americans out here that have over $250,000 in some form of account, whether it's a checking or business account. So maybe they should reevaluate that. And then also Marco just joined up in here, dropped that hola up in here. So good to see you over here. So Marco, and then we also got Timmy up in here. And then Frosted Flake says SVB should change its name to Bank of Ukraine. Okay. Now, taking a look at the markets here, we got Bitcoin coming in at $20,646. You can see here that Bitcoin is holding strong. I'm actually kind of surprised. We did go down and test the 19K mark right before the Silicon Valley news broke. And you can see here we were down to 19.8, or maybe right as the news broke, but then it rebounded right back up to 20,000. I still am in this camp, barring larger economic collapses, like in general. I think if you have some one-off banks going under, bad news for the economy, bad news for the Fed. Well, actually, it could be good news for the Fed, because it could stop. They could stop interest rate hikes if they're starting to see the system fail from the banking side. And I do think 20,000 has just been a really good show of support. And my kind of way of looking at it, and so not much to look at here on this chart. I'm just going to leave it at that. But the way I look at it is that the value of Bitcoin at $20,000, I think, is ultimately a surefire bet, a great buy. And as an investor, someone that's looking to pile into Bitcoin, I think at this point you're starting to realize that you're not going to get too much lower. You're not going to see $3,000 Bitcoin. You're not going to see $4,000 Bitcoin. I think that 16,000 being the bottom, if we go back down there and retest, it's not going to be much less. So 20,000, good value. However, we'll say there is one person that believes that 3,000 is on the table. And who do you think that is? Peter Schiff. Oh my gosh. Oh man. Peter. Stop it. He came out tweeting again. He said, don't make the mistakes. Thinking of buying Bitcoin below, thinking that buying Bitcoin below 3,800 is a bargain just because the current price is better than 80% of the record high. This was back. He tweeted this back in 2018, and he's back again saying, what will you do with that tweet after Bitcoin is back under 3,800? So he still believes that Bitcoin will be at 3,000. Peter, stop it. It's not going to 3,800. Perhaps we test the lows again, 16,000. Maybe there's some kind of black swan events, puts us down to 14, 12. This is 3,000. Come on now. Peter. Not happening. What do you guys think? What is the lowest price target you guys have for Bitcoin? What do you think? Worst case scenario, black swan, like a whole flock of black geese fly in, and this whole with this entourage, not just one black swan. I'm talking about like a whole flock of those things. They're coming in, flying south for the winter. What is the ultimate lowest price you think that Bitcoin will get down to? I say 13,000 would be my first ultimate bottom. I really don't think we'd go under that. Even then, I think 20K, extremely strong support, probably will hold. Something more, if there's more calamity in the greater markets, perhaps we lose the 20K mark. Perhaps if another bank goes under, we will see, sub 20, 19, 18. My only concern is that there was strong support at 18,000. Remember, Bitcoin traded there for quite some time. So, but after 8, so you have 20,000, and you're probably going to go straight down to 18,000 if you lose that support. And then from there, I think it's 16, and there's not much in between there. So we also got Nikki Notes that says 10 to 12,000. And then we also have KB dropping a 11,500. Big Chili Willie says 1,000. Oh, that's for ETH. $1,500. And then Aru says 12K is the minimum. So I'm liking it. All right. There's a couple things I like about my Sundays though. One is my little 80s throwback, right? Got that little 80s vibe. Y'all trying to do some 80s vibes or what? All right, so this is what I got for the 80s track, all right? I got something new today. Yeah. You remember when the bankers had those big ass calculators? And then like for Christmas you'd get like an ad machine, the nerds. It was just like the sliding little like wooden dowels. Y'all a fan of the 80s? What's up? Y'all a fan of the 80s here or what? Talladega says, love it. All right. So my question is about bank runs and what this essentially could look like. Because what is a bank run? A bank run is a line of people at the bank all trying to get their money out simultaneously. And these banks have, if Silicon Valley Bank was a reminder that what banks do with your money, they rehypothecate. And in crypto, we lock people up for that, right? In crypto, you say, hey, you took our money and reinvested it somewhere else, and you should be locked up for that. You took my assets. No, it's not, doesn't belong to you, right? And so there's this war call. Everyone's beating their chest. They're saying, hey, lock up Alex Mashinsky. He used our money to try to earn interest elsewhere. Saying the same thing with FTX. Now, FTX also, now there was also fraud in both of these cases, particularly FTX, where he went against the terms and procedures that are in the FTX website. So not to say that he was playing by the rules, because the banks essentially are playing by the rules. They're acting in a way that their framework is already put in place for them. But still the same practices, right? One's just legal, one is illegal. And think about this, 10%. So if I have $1,000 in a bank, they could take $900 of that and go spend it elsewhere. And not only can they, but they do. And so your money is leaving the bank and going into assets, going into bonds, going into securities, and it's getting lent out to other parties. And this is essentially removing the liquidity from the bank, and you cannot facilitate withdrawals if they're over that 10%. And that's essentially a bank run. Now, you have the protection of the federal government with FDIC to ensure the depositor, me, you, that, hey, if all of a sudden everyone lines up to get their money back, the government guarantees that you get your money back. However, this is only for the retail user. This does not equate to a business, because businesses nowadays, as we mentioned earlier in the show, the businesses here in America operate with more than $250,000, or at least majority of businesses have a lot of money in the bank, and they have payroll. They have to keep their tax money. And when people ring up, think of a retail company, you ring up the taxes, you put those aside and you pay at the end of the year, or you pay quarterly. And so you can't just operate on a month-to-month basis when it comes to a business. So you got to keep your money in the bank. And my concern here is that the bank run might not come from the retail sector, but it might actually come from institutions. Because looking at what happened to Silicon Valley Bank, if I have an account with a local small regional bank, and I have over $250,000 in that bank account, let's say I have a construction firm, say I have a local grocery store chain with 3 or 4 businesses, let's say I have a tire shop with 3 locations or 5 locations in town, say I have an AC company with 7 or 8 trucks with 2 headquarters in 3 different cities, and I am in a regional bank with over $500,000, over $2 million in a bank account. What do you think I am thinking this weekend? Just think about that. Where do you think my head is, right? Because if I am that business owner, if I have that AC company, if I have that grocery store, you better believe I'm closing those accounts. And what happens when I close my account and the business next door closes their account? We're not talking about Gam walking down there removing her $15,000 she has in her savings account. We're talking about massive institutional fleeing of the banking system. Because why? One, your money is not protected after $250,000. And so if you have a company with employees and you have obviously your livelihood tied up into that, you're going to need to protect your company and your employees. And you're going to have to remove your money from the banks if you don't feel confident that these regional banks are going to hold up, because there is rumors. Let me tell you. There is rumors that this is not the only one, and I truly don't. I believe that is true. They're gonna look here. There yesterday, if you were on Twitter, people were freaking out. First Republic Bank. They were saying, hey, they were showing lines of people outside of First Republic Bank trying to get all of their cash out. They're scrambling to withdraw everything. Smaller bank. Not a small bank, but smaller, at least smaller than the Bank of America's and the Wells Fargo. So if you have a company and you have your account, all of your money tied up in these smaller banks, people are freaking out. So anyways, First Republic says its liquidity remains very strong. Any bid to calm nerves following Silicon Valley's bank collapse. There was, I don't have it highlighted here, but First Republic Bank supposedly had a lot of money tied up in the Silicon Valley Bank. Not exactly sure in what form, if they were borrowing from one another, or if they physically had a credit that on that direction, or they're debted. So I don't know. I don't know how it all ties together, but there was no shortage of people coming out, freaking out. And this is how bank runs happen. A lot of time is speculation. A lot of the times it's one investor, one prominent figure coming out and saying, get your money out. And then 5, 10 people freak out, overreact. They tell another 5, 10 people. Next thing you know, there's 100 people at the ATM. Think about this. If you have $500,000 in your bank account, and next thing you know, you're driving around town and you see a line of people at an ATM and at the bank. And when I say a line of people, you see 40, 50 people, 400 people, 500 people. What are you going to do? You're going to just drive by and be like, No, you're going to get in line as well. It's normal psychology. This is your hard-earned money. And so my question is, and so anyways, First Republic sought to reassure customers that the deposits were safe as regional lenders scrambled to dampen contagion fears sparked by the collapse of Silicon Valley Bank. So this is, and then this is actually, once this ad is done playing here, actually, let me see if it'll load up here. You can see, oh, here it is. Gosh. Anyways, there was this video of, there was just hundreds of people lined up outside of the bank, and I guess not. This stupid ad is just gonna keep playing. Anyways, so there was this massive line lining up outside of the First Republic Bank. So could this be the next domino to fall? Now, remember, it doesn't matter how. Now, this says that their liquidity remains very strong. So what does that mean? Instead of having 10% of customer funds, they have 15. They have 25%. I mean, really, how much is very strong? And if half the people go to the bank, it doesn't matter. And so for me, it brought into question like our system that we have is kind of scary, right? Because it doesn't matter which bank it is. If essentially 20% of the users go down to the bank to pull their money out, it's toast. The bank gets taken over by the FDIC because the FDIC isn't going to insure. The FDIC isn't going to insure part of a bank. The only time the FDIC intervenes is by taking over the bank. And so if at any point any bank out there, if 20% of their clients come up, 30% of their clients, depending on how much they have in liquidity, if they come in at the same time, the bank is gonna go under. And so I started realizing it, and it's not anything new. I get that, but I just started realizing the gravity of this because we got so far away from 2008. I'm sitting here thinking this can't happen. That's not going to happen again unless there's like a big collapse. And I started thinking about it. I'm like, there's really nothing stopping a bank run. There's nothing. There's no. Like, what can they do? Shut the bank down? Like, close the front doors? No, there's nothing stopping a bank run. And so all you need now, and then especially in this age of social media, all you need is a tweet thread. And that's it, bro. Somebody gets on Twitter. They say, hey, this company had exposure to this company. And you know what? Get your money out of there. And if it is somebody that has too many followers on Twitter, that's it, dude. That's it. And the bank could be operating better than 90% of the other banks. It could be one of the sound banks. But if all of a sudden they get hit with some FUD, they're going to go under. And if there are too many bank withdrawals, the only thing that can be done is the FDIC takes over the bank. And then they have to sell it to somebody else. That's where we're at now, man. And puts into perspective, crypto. Right? Because crypto, at least on chain, outside of the regulated banking industry, or the outside of the exchanges, crypto essentially is not privy to any bank run. So if you want to go cash out all your Bitcoin, sure. If every person that has Bitcoin wants to move their Bitcoin around, they can. If they want to create a different wallet, they want to, whatever it doesn't matter. It doesn't change anything. Crypto essentially is free of this. Now, we can look at what happened lately with the collapse of centralized exchanges, and we could say, hey, you know what? Bank runs happen there too. Yeah, sure. Now that's a little different. Now, you could even argue that the likes of Binance and the likes of Coinbase can withstand a larger amount of bank run than in a traditional bank, right? I think that if 80% of users went in to withdraw their funds from Coinbase, they would be fine. Publicly traded company, they're very transparent in what they're doing. At the same time, you compare that to a bank, it's only 10% needs to be on hand. That's it. And so I think that we are going to get tested. I think this, and Janet Yellen came out and said they're not going to bail out the banks. So if they don't bail out the banks and there's bank runs, there's nothing to stop a bank run. And we have this digital social media age where people overreact and overblow things out and fake news spreads like wildfire. We are going to see more bank runs, man. We're going to see the collapse of some banking branches for the simple fact that the model that we use for banking is broken. That's it. And we're seeing inflation being sky high. People are already losing trust in the government and the monetary system, right? At least back in 2008, back in the 80s, at least people had more confidence in the US dollar. People had more confidence in the government and the monetary system. I think confidence is fleeting. People are not they don't blindly believe everything the government says anymore, and they call into question what politicians are doing. And with this megaphone that is social media, I'm telling you, we are about to see some full-on bank runs. It's been a broken solution that is coming, but I think because of the dawn of social media, because of the dawn of social media, you cannot suppress the news, right? Because before, the news was controlled by essentially a handful of large conglomerates, Fox, CNN, and if you could just tamper down the fears there, you're fine. But now you can't tamper down Twitter and tell them to shut up. I don't know, man. Crazy world we're about to live in. Anyways, let's take a quick intermission here. Let's get some music going, and then from there we will get some music going. We're gonna say what's up to the chat. Let me know what you guys think so far. What do you think about bank runs? Are we gonna see more bank runs? If you think more bank runs are coming, if more banks are gonna close in 2023, remember we didn't have any closing before 2023. So was this Silicon Valley Bank, Silvergate Bank, was this a one-off event, or is there more to come? Put a 1 in the chat if you think that more banks are gonna close. Put a 2 in the chat if you think that this is a one-off event, not a big deal. Banks are fine. Banks have been around for hundreds of years. 2 in the chat if everything's gonna be fine. Put a 1 in the chat if you think that we are gonna test the banking system. Janet Yellen is about to be yelling. Let me know what y'all think. Let me know if y'all like this song too. A lot of 1s, man. A lot of people sharing my sentiment here, man. Wow, look at that. Big Swole dropped a 2 though. We also, Christopher up in here. If you're new, say hello so I can drop an hola back at you. We got ENS. We got Christopher 13. We got Rosen, Keegan Radcliffe as well. We got Nikki Notes. So to all of you, hola! Welcome to Sin City Crypto. Also Hector in here as well. So 152 people. Pretty dope. Nice little turnout. Guys, do me a favor though. We're at a less than 50% like ratio. Drop a like on this video. If you like this weird little trap music thing I got going on, drop a like, man. If you hate this trap music, drop a like as well. And then say I hate it, but I liked it. John S says, let's go. 1 in the chat. So now Bitcoin essentially solves this. Now here's, I was thinking, I'm walking my dog yesterday. And I was kind of playing out the scenario in my head. What would happen on a countrywide, and even you could say global wide bank run, and what would crypto look like? And so initially was Silvergate goes under, prices go down. Silicon Valley Bank goes under, prices of crypto go down. And I think that's a natural reaction. I'm not surprised there. And I think if all of a sudden we wake up tomorrow and let's just say this First Republic Bank that I brought up, say they get a bank run and FDIC takes them over, I think that would play negatively for crypto. But now, if you were to expand this thought and we were to go outside of just a couple of regional banks, and let's just say this was more widespread, right? And all of a sudden you had a big bank go on, big bank run. Remember, this is not some like crazy aluminum hat here, tinfoil hat thing. This is genuinely something that can happen, right? Because all it is just sentiment from the bank users? Do you feel confident that the money will be in the bank? Do you feel confident that not everybody's going to run to the bank and withdraw money at the same time? That's essentially the only thing holding this whole thing up. And so if you believe that it's possible there's a bank run, which it seemed like with all these ones here, it's a resounding yes. And anyways, if that happens, let's just drop a Wells Fargo, Bank of America. Let's say one of those guys go under, right? Same scenario. What do you think? What do you think people are going to do? If you see Wells Fargo go under, Bank of America go under, you're going to pull your money, right? People are going to stop losing. They're going to have no confidence in the banking system. That's the whole premise of the bank run. And if people are removing their money, nobody wants to keep $10,000, $100,000, $40,000, $4,000. Nobody wants to keep that in cash. Who the hell wants to keep 20 grand in US dollar notes in their house? Nobody does, right? Maybe there's some people that do. But realistically, the reason you have it in a bank is that you're privy to loss, right? Your house catch on fire, somebody can break in, you're going to have a crackhead cousin that, you don't trust, that's, comes over every once in a while and, he likes to snoop around the drawers. And so you're going to want to put that somewhere. And if you don't trust the banks, where are you going to put it? Well, there's only one answer. There's only one answer. You know what it is. It's Bitcoin. It's crypto. Right? It's a no-brainer. And so at the level of one bank going under, one smaller bank going under, one regional bank going under, these have negative price impacts on crypto. But you ratchet that up, and you remove the trust from the banking system to the everyday individual. I'm talking about just guy that never bought crypto, that's just driving to the office every day, that has savings for his daughter's college. He decides to remove money from the bank. Where's he going to put it, man? These people are going to wake up. These people are going to wake up and they're going to say, man, I need to protect my money. And they're going to put it somewhere. They're going to do a little research, and then there's going to be a ton of cash rolling into Bitcoin, man. And that's what it was created for, right? It's no coincidence that Bitcoin was created in 2008, right? Didn't really roll out until 2009, but whatever. 2008, it was created during the financial crisis when Satoshi Nakamoto was looking at what was going on. He was looking at the potential for bank run. He was looking at the banking collapse, like playing out in front of him. And perhaps Satoshi Nakamoto was one of those people with a bank account and was like, what am I going to do with my money? I have $500,000. What am I going to do with it? Man created Bitcoin. He was like, here is a solution. Here is a fix to the problem at hand. And then what ended up happening? The government bailed out the banks at the cost of the taxpayers. And in turn, we got Bitcoin. Now we got Bitcoin. But the reason it was created, that reason is getting tested again. Banks are going under. Second largest bank to go under since Washington Mutual, which was the last big bank to go under during the 2008 financial crisis. I'm not sure what year it went under. It was probably 2009. I'm not exactly sure, but bruh, crazy times, man. Crazy times. Let's get some more music going. So we got 170 people in here, 100 likes. Glad to see the turnout. We got Nikki Notes in here. We got Crypto and Matrix. We got John Suhart. We got Stick Will. And we also got Joseph N. To all of you that are new, Tony C. Hola! Welcome to Sin City Crypto. Crazy world we live in. All right, let's take a look at some crypto prices, and then from there we're gonna kind of look at some investment strategies on your just kind of your personal outlook on life, and how to make sound decisions. Not only make some sound decisions in your personal life that can equate to improving your outlook on your portfolio and your investment strategies, how much money you bring in, and you know what, just living life as a good person. I think a lot of people get tied up in money, how to make more money. You forget that you have a good mindset and you're a good person, you're a caring person, you're a giving person. The world gives back to you, and you give, and the things that you're looking for when you're trying to get money, right? You're falling short on your money, your finances. What you're essentially looking for, a lot of the times, you'll find it just by trying to live a happy and good life and being kind to others. The world will genuinely repay you, right? All right, so taking a look, we got Bitcoin is moving. Holy crap. Bitcoin, just a little bit ago, look at this. Oh, damn. Look at that, bro. Look at that right there. 20,009. We are right here at 21,000, man. Yeah. That. Yo, hey, I'm done. Look at that. Bitcoin's moving. So nice little breakout here. Pretty solid green candle here on this one. And if you guys don't know who I am far from the TA guy. So this is my charting here, is looking at CoinMarketCap's daily and monthly chart. So that's what you're gonna get out of me. But I have an uncanny ability to gauge the sentiment in the market and think about good entry and exit positions by how retail traders and institutions and kind of traditional and historic price ranges, where they could go and where they are going. But anyways, so 21,000. Interesting. Taking a look at the crypto bubbles, you can see that we are green across the landscape here. So you can see Mina Protocol up 8%. I actually just picked this up at I picked it up at 59 cents. Picked up a bunch of Mina Protocol. You know, a lot of if you see, I'll tell you here's a good example of what I saw. So I decided to pick a Mina Protocol at 59 cents. So I'm up 10% now on mine, and this was in the last 30 hours. So I was just looking at, so I picked it up here at 59 cents here. Oh, damn near bought the bottom there. Yeah. Cowboy, how you doing? Oh, look at sweet, baby. You don't buy the bottoms very often, but anyways, you know, I looked at the chart here, and let's see. I looked at, so this is the 3-month, and so I was looking at Mina Protocol. It was at 47 cents, and then it got news of a there was this big rally in ZK rollups with Ethereum and the scaling solutions. A lot of buzz about that. And there was also some upgrade or something that came out with Mina Protocol. I don't remember off the top of my head. But anyways, big investment here. It shot up all the way up to $1, man. I mean, technically got up to $1.20, but realistically, around 90 cents to $1. It was trading there for a few weeks. And then it pulled back, right? And it dropped all the way down to about 70 cents. Then with the latest kind of fall, so if you take a look at the month here, and then it pulled down to 60 cents. And then with the Silicon Valley Bank thing, I saw it drop down to 58. And I'm just kind of looking at where it was recently. This is a scaling solution for Ethereum. And I was like, man, this is likely to rebound. It was down 30%. I was just simply going through and it wasn't even a Mina project thing that I was looking at. I was just kind of going through the tokens here, and I was like, what is down the most for the week? And it was Mina Protocol. It was down 30%. And I'm like, it's a solid project. It's down 30%. Likely we're going to get a rebound here. So I pulled the trigger on that. Let's get some more. Let's get some more 80s music, bro. Y'all down? Down for a little bit more 80s music here. And so yeah, that's a nice little rally there. There's a few others. So that's always a good way to go if you're looking to enter in the market, especially when it's down. Identify the projects that are down the most, especially on the weekly. The weekly is a great indicator of when to get in. And if it's down significantly on the weekly, and it's one of your favorite projects, it's probably, might be worth a second look. Like, here's the thing. Like, I'm not a big Singularity net, but that's 30% down. So if I was a fan, maybe I'll look at. So that's the way I look at it. I'm like, Singularity net down 30, not a big fan. Conflux down another 30, not a big fan. Not sure about that one. So I'll just kind of go through. And so if I was trying to pick one out here that I like, and you see Mina Protocol is still down 21% on the week. And so you knew it was going to rally back. I mean, that's the way I just look at it. And so, oh, here you go. You got MakerDAO. Well, their stablecoin was, the whole stablecoin market got hit. So this is probably why it's down so much for the week. So anyways, that's kind of how I kind of go about it. And so here's a good one. You got Filecoin down 16%. So top 30 project. This was over, I think it was $8. It was earlier this, look at that rip it just had. We're kind of following Bitcoin, obviously, but I was going to go in between. I was either eyeballing Filecoin or Mina for my latest move here. But as you can see, over $9. It was trading at $4 before this run up here, that Filecoin run up. So great value on Filecoin again. I know a lot of people are looking to pile in on Filecoin. I think it might be a good time to get back into it. Now, let's see, XRP 36 cents, and then taking a look back here at the bubbles, and then you can actually pull up the bubbles here on the weekly and get a better look. Litecoin down 22%, Graph down 18%. So, and also Crypto Fear and Greed Index sitting at a 33. So, yeah. And then lastly, one other piece of news I wanted to cover with what has happened over the weekend was we had Circle, my lord, and it is still, take a look, it is still off of its $1 peg. So 96 cents. This is supposed to be the white knight and savior of stablecoins. Now, there's a big day coming up for Circle, and y'all know what it is. If you don't know what it is, let me tell you. It's called Coinbase. Tomorrow, ladies and gentlemen, tomorrow Coinbase will probably offer USDC to trade again. If you're not familiar with what happened, we had, first of all, here we go. This is how we got here. So following the confirmation at the end of today that wires initially were initiated on Thursday to remove balances were not yet processed, 3.3 billion of 40 billion of USDC reserves remain at Silicon Valley Bank. Basically, Circle joined in on the run on the bank, and they put in for withdrawal of their $3.3 billion via a wire, and it did not process. $3.3 billion. Let's think about that. What was the hole that FTX had? The big number that everyone's throwing out. Where did it go? $8 billion is what brought down FTX, right? Their valuation was 60 billion at one point. And you have $40 billion of USDC reserves, and over 3 billion is gone. not FDIC insured. That is gone. And they said in the second part of this tweet, like other customers and debtors who relied on SVB for banking services, Circle joins calls for continuity of this important bank in the U.S. economy and will follow guidance provided by federal regulators. Well. So anyways, they said this. Price of Circle dropped all the way down to 88 cents at one point. I was watching that live. I was actually sitting there with David. I was like, David, bro, like, this thing is at 88 cents, dude. I didn't know when this thing was going to stop moving. Look at that. Crazy. And still hasn't got back to 97 cents. I don't have the tweet from let me see if I can find the tweet here. So from Coinbase, Coinbase came out and said, "Hey, we're halting all trading pairs involve USDC." Now, pretty substantial because, or actually, they're halting the USDC and USD. So basically, you're not letting you cash out your USDC. Now, here's the tweet. So we are temporarily pausing USDC to USD conversions over the weekend while the banks are closed. Once again, why the hell are banks closed on the weekends? Anyways, during periods of heightened activity, these runs on USDC from the banks, Coinbase went all in on USDC. Remember that? They were trying to get rid of Tether. They're getting rid of all of their trading pairs that are tied to Tether. They're forcing their users to use USDC. This is BlackRock's investment. This is the white knight. This is the savior of crypto. It's supposed to be Circle and their stable coin. This is supposed to be the front runner for the private CBDC, or perhaps some hybrid CBDC that we're going to roll out. And the dollar stablecoin in $1. It got down to 88 cents and it's down to 96 cents. And when Coinbase opens up on Monday, what do you think is going to happen to anybody that has USDC on Coinbase? What do you think is going to happen when they open up withdrawals on USDC? Think about it. This price is going to drop again. And not a guarantee. They still have 36 point something billion dollars to facilitate withdrawals. Well, will there be a strain on the price of USDC? Will there be a strain on the liquidity for USDC? Perhaps, probably. I'm very curious to see what happens tomorrow morning when it comes to Circle, because withdrawals were paused. What happens when you let them draw on that again? What happens when the investors are allowed to withdraw their cash from USDC? I think this spooked the market, and I think a lot of people are going to try to exit. Now, on top of that, who uses USDC a lot? It's institutions. There is more institutional money tied up in USDC than there is retail. And we just saw the institutional collapse, or we saw a bank that facilitated a lot of institutional money, Silicon Valley Bank, go under. So if you're a tech company that has crypto in USDC, what do you think you're going to do? You just saw your bank go under. You got money on USDC. Maybe you had no exposure to Silicon Valley Bank. It doesn't matter if you're a tech company and the bank that most tech companies use went under, and now you're seeing USDC going off its peg. What do you think these companies are going to do? The second they can, they're going to withdraw money just to at least be safe, right? I mean, if I had a tech company and I had $2, $4, $5, $10 million in USDC on Coinbase, and I can't take my money out, and the other bank that the company across the street just went under, like, what do you think I'm gonna do? It's uncertain times, man, and I'm really curious to see what USDC is gonna have, what's gonna happen with that tomorrow, man. Really curious to see what happens with that tomorrow, man. Crazy, dude. Crazy. Who we got up in the chat? Who's up in here today? Where my people's at? We got 170 people, 126 likes. We got... Where are my new people? We got Will up in here. Doug Yoder is up in here as well. And then we got Eric Ward, Chuck Finger, Paul Lukin, and then who else? We got Huffy up in here, A1. To all of you that are new, Bob Mo, CVO Crypto up in here as well. Hola! Welcome to Sin City Crypto. We also got Crypto Trends up in here. So let's so I gave my thoughts on, first of all, what's gonna happen with Coinbase tomorrow, relisting or offering withdrawals on USDC. You have bank runs potentially going to happen at the beginning of the week. You got an uncertain Fed. We got CPI numbers coming out on Tuesday. Man, I'm telling you, tomorrow, I'm excited for tomorrow. Tomorrow and Tuesday, it's gonna be a big day, man. It's gonna be a big day. Like, you need to be glued to what's happening this week, because a lot is gonna unfold. We're gonna find out a lot about where this economy is going. So, I want to show you guys Janet Yellen on Face the Nation with Margaret Brenner. This is about a 6-minute video. And so we're going to take a look at this here. So here we go. Music. All right. So here we go.
We go now to Treasury Secretary Janet Yellen. Madam Secretary, good morning.
Good morning, Margaret.
I want to get straight to it because the markets will soon reopen for trading. Does the government need to intervene and take emergency measures because of SVB's failure?
Well, let me say America's economy relies on a safe and sound banking system that can provide for the credit needs of our households and businesses. So whenever a bank, especially one like Silicon Valley Bank with billions of dollars in deposits, fails, it's clearly a concern. From the standpoint of depositors, many of which may be small businesses, they rely on access to their funds to be able to pay the bills that they have, and they employ tens of thousands of people across the country. We've been hearing from those depositors and other concerned people this weekend. So let me say that I've been working all weekend with our banking regulators to design appropriate policies to address this situation. I can't really provide further details at this time, but what I do want to do is emphasize that the American banking system is really safe and well capitalized. It's resilient.
Can you say whether these problems were unique to Silicon Valley Bank, or can you say whether there will be other regional bank failures?
Well, look, let me just say that we want to make sure that the troubles that exist at one bank don't create contagion to others that are sound, and a goal always of supervision and regulation is to make sure that contagion can't occur.
your counterpart in the United Kingdom has said that the government there has ruled out a bailout of the UK arm of Silicon Valley Bank. Have you also ruled out that kind of government intervention?
Well, let me be clear that during the financial crisis, there were investors and owners of systemic large banks that were bailed out, and we're certainly not looking, and the reforms that have been put in place means that we're not going to do that again, but we are concerned about depositors and are focused on trying to meet their needs.
Do you expect a deal or something to happen that can reassure the markets before Asia opens tonight and U.S. markets open tomorrow?
We certainly are working to address this situation in a timely way.
Now, I know you know this region of the country so well because you served at the San Francisco Fed years ago. The tech sector has already been suffering from layoffs. It's already under pressure, and this is really
So I'm going to go ahead and pause that real quick. So, interesting, huh? So you have Janet Yellen coming out and saying that she's they don't plan on bailing out the banks, right? They're not bailing out the banks. Which, thank God, right? Thank God that at least we've gotten to this point where, well, you know what, it's the first bank. And if this were to happen with multiple banks, I'm sure they'll probably reassess that and decide to print more money and hand out more cash. I think the likelihood of that is realistic. But anyways, she says they're not going to bail out the banks, but they are looking to help the depositors, right? So obviously, I think this is the best case scenario. If you're going to print money, because they're going to, right? Yeah, you could draw on the FDIC reserves. You can simply say, hey, you know what? Instead of the 250,000, we will. And there've been some loose talks of that the 250,000 will be guaranteed, like normal, and then that they'll get a certain percentage of money over the top of that guaranteed. And what that would look like, who knows? There's also the chance that, now don't dismiss that, we come around Monday and they've already found a bidder and a buyer for Silicon Valley Bank. That is the typical procedure. So when the FDIC takes over a bank, they go in, they take over all the assets. There's three things they can do. One, they can liquidate the bank, and they can just close it down and then sell off assets and then pay off the guarantees. Now, over 98%, or it was like 97.6% of accounts at Silicon Valley Bank were under the over the $250,000 threshold, and so a little different than a regular bank. So now, option one, you close the bank. Option two is that the FDIC could essentially just continue operations with the bank. They are they have all the means and then the employees and the know-how to run a bank. And that's what they do. And so they could run the bank, but what they're going to try to do is sell the bank, auction off all the assets, and then when someone comes in to buy them, they'll also guarantee a lot of the debt on top of that. So that way, whoever comes in and buys it has little risk, or not a crazy amount of risk. And so I think it's about 80% of the accounts, and this is historically speaking, when it comes to the FDIC auctioning off a bank, that 80% of the accounts will essentially be guaranteed by the FDIC. And so will there be a situation where Janet Yellen instructs FDIC to draw on their money, on their reserves that they have, to pay out more of these companies or a larger percentage, increase the threshold. I think it's possible. I think that's the direction we're going. But I'd be curious to see if somebody comes in, buys the bank at a discount with the security or the insurance that the FDIC is gonna make sure that whoever comes in and buys it doesn't get screwed holding the bag. And they do that by insuring those debts as well. But it's a lot of money, man. It's like, was it $600 billion or something like that, right? I think it was the money tied up in that in the Silicon Valley Bank. So a lot of money. What do you guys think about all of this? You think that we're gonna? Because here's the thing: no matter what, we're gonna be printing, right? Because first of all, you could draw on the FDIC. So banks, when they operate, they have to pay a premium to FDIC insurance, and then that money is what essentially is paid out if a bank goes under. But they only have so much amount of money, and when that dries up, they draw from the federal government. And so they haven't done that historically, but in a situation where they run out of money at the FDIC, they can get money from the Treasury Department. And it sounds like the Treasury Department is willing to help out debtors. And then they're probably going to do it in that particular fashion. But we'll see if someone comes in and buys them out, though. So interesting. And then also, we're going to just finish out here. We're going to check out the last of it. And then, we'll come back after this.
Of American innovation. How severe will the consequences be for that innovation?
I think it depends on how this situation is resolved, but well aware that many startup firms have deposits and venture capital firms have deposits at this bank that have been affected by its failure. So this is something we're working to try to resolve.
You know, when you look big picture at this bank had massive exposure to this one particular industry. How did government regulators miss that risk?
I would say that although the tech sector has been suffering from a downturn and has had some significant layoffs, the problems of this bank from reporting about its situation suggest that because we're in a higher interest rate environment, assets that it holds, many of which are treasury assets or mortgage-backed securities.
You hear that? We're in a higher interest environment. So she could have easily said that they took on too much risk, that they were funding, their venture capital arm bank was funding higher risk companies that are likely to have pullbacks. Obviously, the tech sector, a lot more volatile. Could have been an easy out for her there, but she wanted to address the fact that this bank got into the situation that they were because of the interest rate hikes by the Fed, which you'll see you're going to get a follow-up question on this as well.
That are guaranteed by the government lose market value. Mm-hmm. And the problems of the tech sector aren't at the heart of the problems of this bank.
Do you foresee what's happening now as making it harder for Fed Chair Powell to continue with the kind of rate hikes he's indicated he plans?
The Federal Reserve is independent and charged with making...
Sidestep. Yeah, she dodged that one. So she doesn't answer the question on what she thinks the Fed is going to do. But kind of interesting, huh? Interesting. She brought up a good point, though. First of all, she's saying the bank got to where it was because of the interest rate hikes. That is a common practice. Now, Silicon Valley Bank also happened to buy treasury bonds at a historically low price at a 1.3%. and they locked it up for 3.6 years. And so they sold off a bunch of those stocks at a massive loss. And then they tried to inflate their stock by selling a bunch of their stock. And that's essentially what collapsed the whole damn company. They just didn't have money. Venture capital started buzzing. They all started talking amongst each other saying, hey, get your money out. And as remember, these are not retail investors, so these aren't small accounts. You had giant companies with the likes of billions of dollars doing a bank run. And so bank run is not your typical mom and pop business, your typical just guy on the streets going to get his money out because, he read something on Twitter. These are companies that are taking out massive withdrawals. And I'm just curious, man, if this spills over into other industries, and if you're going to see, because this is the tech sector, are we going to see the likes of corporate accounts and business accounts doing the same thing? Are your lawyers and doctors' offices, are they going to go and have a run on the banks if something similar were to happen? No, man. It's very interesting times that we're in right now, man. Very interesting. Okay. So anyways, I'm going to wrap it up on that subject, on the bank runs. And I do want to discuss a little bit about kind of what we do here on Sundays. So, well, for one, we like to play music on Sundays. That's number one. I got this little rap song right here, dude. This thing's all right. So, for one, on Sundays, we like to play a little music. We like to vibe, and we also like to discuss what can we do to make more money, right?
Tell a hater they should get like me. Seem like everybody wanna be the boss, but it costs and these lames ain't like me. Drop a couple bands on the crypto fans, no make go. I ain't gotta tell them what it is. Tell them I'm a grown man, so you'll never fool me with the cap you be selling to the kids. Shorty, we the lords of the land, we wavy.
It's like a the dude talks about crypto in this.
Chillin' with my shorty, got the crib on karate, keep up, little baby, that's a kickback. Can't flex on the living hate free, but he say real, but I know that can't be. Paying for the late fee, hit her from the side till I get home safely. Got 3 chains on me, neck strong in a.
I don't know. Anyways, he talks about crypto in there somewhere, but so here's my perspective, right? My perspective, and if you've seen this before, you'll know that essentially your crypto investment is disposable income, right? You're not paying your mortgage because you want to invest in crypto. You're not missing out on your car payment because you want to invest in crypto. This kind of goes in for investing in general. You can talk about stocks as well, but essentially, your portfolio is made up of your disposable income. And so on Sunday, I personally want to reflect on what I'm doing with my money, what I'm doing with my time, and what I'm doing with my finances. Because essentially, the more efficient that I am in my personal life, the more disposable income I'm going to have. And for one, your disposable income is made up of 2 things. One, cash in, and then cash out, right? Or 2 things, cash in and cash out. And so how much money you make and how much liabilities you have. And so going back to your car and your house, if your house payment, if you're paying $3,000 for a nice house, or say you have a really nice apartment and you're spending, $2,800 on your apartment monthly, that's drawing more money away from your disposable income. If you're only making, say, $80,000 a year, if you're bringing in $5,000 a month, in income, and or say, yeah, you know, after tax, you're bringing in 5,000 and you're paying 2,500 on your rent, then, you know, half of your income goes straight to your living. And then you can say the same thing about your car. If you're paying $800 and you only make 5,000, you're already, you know, set back significantly. Doesn't include any utilities. And so one, you can look at, you know, hey, where can I make cuts, right? And I'm in a big camp that little cuts, sure, they'll add up, but generally I like to look at it in a trunk situation. I'm in the camp that you're not going to get rich by passing on your Starbucks coffee. At the end of the day, $5 or $8, whatever it is, those do add up, and these small costs do add up. But what you want to do is you want to look at your big heavy hitters. And you know, if you can get a cheaper apartment, I know it's a hard time to get that, or if you're looking for a new apartment, for example, or a new house, and you have option A, and option A is significantly more expensive than option B, and then think about the long-term benefits of not spending as much money on a more expensive house. And so living below your means, we see like Elon Musk, and I don't know how true it is, where, you know, he's, you know, during his rise to, you know, to dominance, when he launched all three of his companies, you know, SpaceX, Tesla, and then who was it, Boring Company, and then the anyways, all his companies that he's had. Essentially, when he was surviving off of that PayPal money that he had when he sold PayPal, you know, he was living in like a small apartment, whatever. He's trying to be as efficient as possible with his money. And so that's what the smartest people out here are doing, is that they're making cutbacks in their life. Because Elon Musk sold PayPal, I think it was for like $30 million or something like that. And he could have went out and bought a nice Lambo, right? Sale of PayPal. Let's see how much he got. Oh, actually, it was $180 million. And so he sold PayPal for $180 million, and so he sold it for $1.5 billion, but he reportedly earned $180 million. And when he got down to the starting SpaceX, he supposedly had, between Tesla and SpaceX, he had $30 million, and he was trying to figure out where he's going to put, you know, X amount of money. Was he going to put it in this company or that company? And he lived below his means. And so that's just, and I want to bring that story up because some of the most successful entrepreneurs make the hard decisions and make the cuts in their life that essentially prioritize where their value is going. So there's that, and then there's the second scenario is the second part of the equation is how much money you make. And I want to go back to something I said before, and it's in the fact that if you're making the same amount of money in 2019 as you are now, with inflation going up, like, you haven't made any progress in the last 4 years. So I like to have my little 5-year window, right? How much money did I make 5 years ago? How much money do I make now? And if I haven't substantially increased that, I need to reevaluate, and I need to raise that bar. Because if in 2019 you're making $60,000 a year, and now you're making $63,000 a year, you are behind the curve. That means you've only increased your own personal value by $3,000 over the last 4 years, while inflation has increased exponentially since then. The value of the dollars decreased exponentially. Your purchasing power has decreased. And so, are you keeping up with inflation? That's number one. And if you're not at least doing that, you're going backwards. And you want to be moving forward in life. So you don't want to be moving sideways. You don't want to be making. So let's think about it. In 2019, you're making $60,000 a year. With inflation and the cost of goods and the depreciation of the dollar, I would say you probably need 80,000, right? So if you're not at say 85,000 when you made $60,000 a year, if you're not there at least, you're not keeping up. And so that's the baseline. That's where the minimum. Like that means if you decided to make no growth, that's where you need to be. That's falling short. And so you need to be thinking, about personal growth. And this all comes from education and investing in yourself. This is where all of it comes in. And it doesn't mean you got to go sign up for college. It doesn't mean that you have to like all of a sudden start learning an entire new craft. But take what you have, take what you're interested in, and apply yourself to taking that to the next level in some way or form. Now, if it's a hobby, maybe take that hobby to the next level. If it's your job and there's a promotion out there, there's another company or the sector, some more certifications, like let's start looking into those. If you like the more traditional format of learning with college, you don't need to go get a full degree, bachelor's, associate's degree. You can sign up for courses just a la carte or individually. You don't have to go all the way in. There's community colleges as well. Or, you know what? If you like the traditional system, you can go and get an associate's degree. Associate's degree is a 2-year college that does not require quite as much money. You can do it in a community college, and you can have an associate's degree written on your resume. And it could also spark inspiration into a different avenue. And so you got that. And then Dexter Big Bag says Bitcoin's at 21,178. Is it really? Well, hold on a second. I just want to check that out. But yeah, it is. Oof, man, crypto. I got to take an intermission here, and we'll get back to my thought here in a minute. But yeah, crypto is moving, ladies and gentlemen. We got Bitcoin at 21,360. So big movement in Bitcoin. Jeez. So this thing is not slowing down. Look at that. So yeah, curious to see where this will end up at. It was at 22.4 before kind of this recent pullback. So is this a zone that we'll get back to? Perhaps. So anyways, we'll get back to the charts here in a minute, but yeah, so where I'm getting at is that educating yourself, first of all, not only does it increase your personal value when it comes to getting a job or career, but it also stimulates the creative side of your mind, right? Because if you go in, you do the same mundane tasks, and I don't care what job you are at, every time you go, every job is the same. Every time you go somewhere and you work somewhere for 3, 5, 10 years without changing essentially your position, you pretty much cap out your own knowledge after probably 6 months, right? You kind of learn the industry, you learn everything that you learn, all your job tasks within 6 months. And then from there, you're just perfecting your craft. After about a year, you're pretty good at what you do. 2 years, you can train other people. After that, you need to move, man. If you're at a job for more than 2 years, you either need to move upward in that career field, or you need to pick up and go somewhere else. Like you need to go and like, here's the thing. I'm in the service industry out here in Vegas. And, I grew up in the kitchens. Like leaving a cook position at one job and going somewhere else as a cook, making the same amount of money, and from one cafe to another. You're gonna learn like 2 menu items. After a month, you already know everything there is about the restaurant. Your headroom for improvement is only so much. But in my analogy as a chef, if you were to leave that cafe and you go to a steakhouse, now you learn an entirely new cuisine. So you're still in your same field, but you're growing. You're adding to your repertoire of skill sets. Now, after you stick to the steakhouse, you can go do French, you can go do Japanese, you can do sushi. Perhaps you can do some catering style events, some banquets. And so that's one way you can expand your knowledge, is by getting experience in the field, by going into different sectors of whatever you're doing. And at the end of the day, man, if you break away from this mentality that, hey, I need my pension, my retirement, I need my my medical, whatever it is. I understand that has value and importance, but what has more value and importance? Making $50,000 a year or $70,000 a year and not having to pay a medical bill? Or is it doing something great in life, taking on some risk, making some bold moves into professions that might actually interest you and spur excitement in your life? And would you rather chase that opportunity with the potential for failure, the potential for a medical bill, and live life without so much regret? Or would you rather just sit back, play it safe, and never pay for a hospital bill again, but yet work for the next 30 years for another company in a job that makes you miserable, just to retire and make $1,200 a month, which is not enough for you to survive? And so you end up going and pick up a second job. So retirement really isn't actually retirement. It's just bringing in a median salary paycheck on a monthly basis that can't cover bills after working there for 30 years. And so for me, it's, ask yourself, like, do you want to live the safe life and not take risk and be bored? Or would you like to take on that risk, try some hobbies and crafts and jobs and things that actually interest you and that you're actually passionate about, that can make money for you, doing something you like to do? I took a big risk, man. I took a big risk with this YouTube thing, but I for one, I found it very, I found crypto, it solves a lot of issues. And so for me, I had been burned over and over and over again by a banking system. I worked as a cook. I made like $15 an hour, and I had kids and a wife, and and a mortgage, and I didn't make enough money. And every time I got close to that zero mark, or I, had somebody's birthday or something I was trying to buy, I would overdraft, and then I'd have $15 fee, and then that would be $20 fee, and then I'd try to gamble to try to make up some of the difference because I had nobody to borrow from. And it just came from this system that just penalized me for being on the edge. And a lot of, is it my fault? 100%. Was it aided and was I preyed upon by the banking system? Were the people that gained the most from my misery the people that needed it the least? Absolutely. And then is there a technology out there that solves and remedies this and holds people accountable and gives people their own power? There is, and it's crypto. And that's why I got into it. And so for me, I saw what it did for me personally. I saw its potential, and I wanted to share that with all of you. I wanted to spread the word with as many people as possible, because what I realized is that I saw the magic in this, but other people around me thought it was a scam, or they just wanted to simply get a quick return on money. And I'm just like, just something so much better than what you realize here, right in front of you. The answer is here. The problems of these bank runs, the finance, the politics, like the answers in front of our faces. And so for me, have something I'm passionate about, and I want to make a career out of it. I want to reach as many people as I possibly can. And so I ask you to take something you're passionate about, something you truly believe in, and why not make money off of that? Or why not make a career? Now, if you're a personal trainer and you like working out, and maybe you just love showing people how to, different techniques, like maybe it's not the best paying job in the world. Maybe it's not the strongest position for money, but if that's what truly makes you happy, then chase that. Because chasing that and living below your means, because if you make $70,000 a year as a personal trainer, but that's enough to get by for your apartment, but you feel personally fulfilled by helping people better themselves physically, mentally, then chase that. Because what we're chasing now, this dream, this America's the American dream, where you buy a house you can't afford, you work a job, your wife has to work a job, and then you have to take on credit card debt and all of this just to go and work a 9-to-5 in a cubicle for a job you don't hate, you hate, for a manager that doesn't respect you and disrespects you. If that's what you are doing day in and day out, you'll wake the fuck up. It's not what life is about. Do something that you enjoy. You can make a living from it. And if your expenditures are too high, cut them back, man. Sell your damn car, buy something cheaper. If that's the only thing, is if you bought a car that's too expensive and your house is too expensive and you can't change your job because of those factors, change that. Change that. Or if your profession happens to make a ton of money, then go after that 150%. Go after that as hard as you possibly can. Go out, put your goals down on paper and go after it, because you only got one life, man. And time goes by so quick. Next thing you know, you're 35. Next thing you know, you're 40. Like, I was talking to somebody, they were 29 years old. And they've been working the same job for 4 years. And I'm just like, yo, well, what's next? Good paying job, but it's not fulfilling. It's a crappy job. It's, as far as your tasks, you don't get any self-worth out of it. And, but it's a good paycheck. And I asked her, I was like, what's the next move? She was like, I don't know. I'll probably work this for a few more years. A few more years. 3 or 4 more years. I already been there 4 years. I'm going to move sideways. Make no progress in life. 29 years old. Already set out in her mind. She has no ambition to do anything different for the next 3 to 4 years. Making the same amount of money she makes now. Going to be 33 years old. Why not start now? Why not take some risk? Maybe take a little pay cut. Do something you're passionate about in a field that interests you, and take some risk. Take some risk. Yeah, man, take some risk. See what else we got. Get some little music going on in here. So let's give a little shout out to the chat here. If you're new, say hello so we can drop a whole lot back at you. We got Kino, Davelin. We got FZ. We also got J-Mac up in here. We got Bun Rong Ray, Antonio Crusoe. We got Liquidated Shorts up in here, as well as Mike Mene, Ivalov, King Peasant. And then we also got Dibsy in here. And then to all of you, hola! Welcome to Sin City Crypto. Jay Powell says, I have inspired him to print some more money. Money printing is coming, guys. Money printing is coming. Now, they might not slow down on this Fed rate hikes. I think we're still going to stay the course because the headline is that you have inflation's too high. CPI is still going to come in over 5% this coming Tuesday. And the Fed's going to keep doing what they're doing, raising interest rates or at least keeping where they're at. And banks are going to be stressed. And so the system doesn't collapse. I think they're going to keep doing what they're doing, but they're going to print money. They're going to offer a way out where they can still have the interest rate hike. They do through quantitative easing by buying corporate debt. But it's not the answer. And I'm curious to see where we're going to go here soon, guys. I'm really curious because system is getting stressed. System is getting stressed. All right, we got Chance up in here as well. Digital Woody, he says Hotlanta GA, and then Nate Anderson as well up in here. I'd like to see the Sunday cruise a little different than our live show, so glad to have all of y'all in here. If you're not subscribed, hit the subscribe button, join the club, and then yeah, we do play a little bit of music here on Sundays. We're trying to chill. Remember, Sunday's a great day. Not only is it your day off, not only is it a day off, but it's a day to evaluate. How did my week go? Should always evaluate. You don't know where you're at unless you stop and see where you're at. If you don't look at the map and see where did I come from, what progress have I made, where am I going, and Sunday is the best day to do it, right? It's the end of the week. Evaluate and then set your goals for the following week. I set goals for my week here, didn't reach them all. Cut down that tree though. Didn't shave my cat, but I cut down that tree. So with your own personal goals, get them down on paper, or at least have that inner monologue. Say, hey, this week I'm gonna do this. This week I'm gonna go to the gym 3 times. Whatever it is. Start making some progress in your life, and then on Sunday, reflect. Did I get what I wanted to get done? Yes, no, that's it. Hold yourself accountable. Sunday's a great day to do that. Everyone always wants to take the day off. Stop taking so many days off. You get off of work, that's your day off, right? You come home, you go to work, you sit there, you drink beer, or whatever it is, you sit at the house. That's your time off. You need to have more of those days. You need to have a full day of that. Like, you need to be productive. Now, just because day off from work doesn't mean you just sit on the couch all damn day. Like, it's time to get up, be productive, knock some stuff out, take care of some stuff at home, spend time with people that truly matter, make your time with those people productive, not just sitting on the couch talking about what you see on Twitter there because you're scrolling. You're like, hey, did you see about this or that? Anyways, guys, I am about to wrap this thing up. So, we got Wick says Pensacola. I mean, my dad lived in Pensacola for a little while. I went down and visited. Pretty cool place. Really quiet. White sandy beaches. And then Nate Anderson says he's from Cleveland. And then Crypto Billy said, my son is 29, graduated from Duke, is a doctor now because he listened to his dad. Followed his dreams, ambitions, goals. But yeah, you know, it helps when you have family kicking you in the butt, man. And if you have kids, I could say the best thing you could do for kids, and I realize this maybe a little later in my parental days, but best thing you can do for kids is to teach by example and be the most badass dad or mom you can be. Because I mean, here's an extreme. If you're drunk and you're just wasted all day and you just go to work and you come home and you drink and you're just passed out, and then you try to sit there and have a conversation with your kid and say, hey, you need to take life seriously. You need to be working. Don't do drugs. And yet you're over here passed out. This is an example, or an extreme example, that leading by example is the most effective way to help the development of a young person. And so for me, it's first of all, do what you preach. Don't say one thing and do another. And the second would be that be the hardest working person in that house, man. You want your kids to work hard? Don't be lazy. If you spend 3, 4, 5, 10 years of your kid's life when they're growing up not accomplishing much, I mean, don't be surprised when your kids follow in your footsteps. What? Kids are around, if you have your kids and you're taking care of all your responsibilities, you're busting ass, you're getting things done, you're making tons of money, you're extremely successful, and you're preaching to them all the while. That's it, man. That's the answer right there. So I think that's leading by example is the best way of teaching. So anyways, guys, I am signing off. So to all of you who joined us today, I want to thank you. I want to thank you for joining your boy Big Rob on the Rant Ramble Sundays. Bitcoin is at 21,500, so Bitcoin's moving. We are also very curious to see what happens with Circle price tomorrow when Coinbase lists or reopens withdrawals on USDC. You have the Fed on Tuesday. What is there going to be their reaction? Because Tuesday you have the CPI numbers. Also, there's an emergency meeting with the Treasury Secretary, also the Fed, on what is happening with the banking collapse. What is that going to look like? And so, big week shaping up. Will there be more bank runs? Will this First Republic Bank, is that all just FUD? Is that all fake news? Or are they in trouble? Well, what is not fake is the hundreds of people standing outside of First Bank trying to get their money out. That's real. We got Talladega Fitness also dropped a super chat there. So real quick, let's get some super chat going on here. So $2.99, much love. Thank you, my dude. And also, where will the price of Bitcoin go? Will we rebound to 25,000? 22,000, I think, is likely. And remember, bust ass. Don't be lazy. Chase your dreams. Work hard. Inspire yourself. And kick the vices. If you're drinking too much, stop it. If you're smoking too much, stop it. If you're spending too much money on designer goods that you're trying to impress other people with, stop it. Live a happy life. Anyways, guys, much love. Peace out.